Investments in securities are subject to market risks. Read all related documents carefully before investing. Hello and welcome to the Weekend Investing Daily Byte. We're shooting this episode on 15th of June. And for the first time in many weeks, the markets actually showed signs of weakness where the bank nifty kept falling through the day and did not relent even near the close. So, this is very different from the behavior that we have been seeing so far. And as I have been saying many times, that Bank Nifty actually, in most cases, preempts the market move. So, looking at Bank Nifty trends, one can preempt where the market is likely to go. In many cases that we've seen over so many years, Bank Nifty tends to lead the market, whether upside or downside. So today's move, uh, is very indicative of some intermediate, resting of the market here. Although the rest of the market, the broader part of the market is still not coming off. So small cap still going up, mid cap still going up, but there is some hesitancy in the large cap space, and very much so clearly in the banking and finance space. Of course, today's reaction could also have been largely due to the Fed meet uh, yesterday, where the US Fed has indicated that there may be two more rounds of hikes in the interest rate, and hence there may not be any interest rate cuts for 2023. That is the current expectation, and that may have caused some fence sitter, institutions or people who are waiting for this outcome of this meeting to sell their position. So we will know in a couple of days if this has any follow-up strength on the downside or not. Uh, but the larger part of the market where FIIs are sort of not so present, that was not harmed, at least in today's session, and we'll see that in the charts. So Nifty, you can see a bearish engulfing candle, somewhat similar to what we saw 4 or 5 days ago, where we had an attempt. So essentially, if you see the thesis of this momentum run, it's very steep at the beginning here, then it becomes more shallow and it's becoming shallower and shallower. So this is how usually the trend may taper off, or they may go into some sort of a corrective mode. And we were very near the all-time high. I was expecting that the all-time high would break first and then market will go into some kind of consolidation, but so far it looks like that the market is nifty, especially, is wanting to spend more time before a clear breakout happens. And the nifty heat map is very clear. One part of the screen is totally red, which was IT and banking and finance. State Bank of India leading the banks down minus 1.8%, Kotak Bank down, HDFC Bank down. HDFC and HDFC Bank have another problem, that the merger is happening and a lot of institutions uh, may be sitting on both the stocks, and combined there are restrictions how much you can invest in one stock. So once they become a merged entity, many institutions or even uh, mutual funds may have to pare down their exposure to the combined entity, and that's probably also causing some weakness in these counters. IT stocks down today. It does seem like they are also preempting a fall in the US tech market, although S&P 500 and Nasdaq were reasonably resilient after the announcement last night. What was going up today? Pharma was the only sector that was really shining out bright. Divi's Lab up 2.6%, Dr. Reddy's 2.3%, Cipla 1.9%, and several other pharma stocks went up. Autos remained sort of, you know, unmoved, or one should say not so connected with this move here. ITC was up, Levers was down a bit, Reliance was flat. So a good chunk of the market remained flat. Two sectors really were the ones that took the brunt, and one or two sectors were leading the rally. So you can see here in the sectoral overview, Pharma doing extremely well at plus 1.4%, FMCG following at 0.5%, consumption at 0.4%, autos up 0.2%, infra 0.1%. And then there were several losers, with PSU banks and private banks both losing the most in today's session. Now, uh, as I was mentioning earlier, real estate, which has been doing so well. Now, this is also a slight negative for real estate, that no, and if globally rates will not be cut, I doubt if Indian central bank will be able to cut maybe more than once. I doubt that. They will also keep waiting for the global cues for how interest rates are paying out. But currently, because Indian inflation is very much secured, there may be a case for a cut in the second half. But it does seem like that the US is ruling out that situation. So Fed's move actually was a bit hawkish, and the tone and tenor was hawkish last night, and that is why we are seeing some red on the screen. Nifty midcaps, another new high at 35,000, although paired the intraday gains, still managing a new higher close. Small cap index, I don't think you'll be able to see this today's candle because it's a longer span, but again higher today than yesterday, and did not go even into the morning gap. So definitely so far still good strength on small cap, and this is where the damage actually was happening. Nifty Bank, you can see after a month of consolidation, has given down, and we are now at the bottom of this. If you can imagine a consolidation box here, we are at the bottom of that. So the worst case scenario could be that we break down from this box and go towards maybe 42,500. But the best case could be that we may bottom here, create a double triple bottom here, and start up again. That is also possible because, as I mentioned, some fence sitter uh, sales may have happened today. So today's discussion is on pharma. Uh, this sector has been languishing since a long period of time, and I'm talking largely about large pharma, or the higher large cap pharma space, because in mid and small caps there have been big winners in the last few years. We've had a ride on several of them, whether it was Laurus Labs, whether it was Aarti, several names I can rattle out, where last 3-4 years a lot of gains were made. But predominantly, if we see the larger pharma space, the Sun Pharmas, the Lupin, the Dr. Reddy's, the TV's Lab, so on and so forth, there we have seen a big lull since, I would say, 2015. So 2015 pharma index made a high at 14,000. But the context here is that in the last 4 years, from 2011 to 2015, uh, in those 4 years, pharma went up more than 3 times. Pharma index. So several of these stocks had actually up much more also. So given that this kind of gain came in such a short period of time, it took a long time for the market to digest it, and it did so till the COVID bottom. And from there, a new pharma rally started from around 6,000 odd levels up till about 14,500, 14,700. So more than doubling from here. And in the last year and a half, it has consolidated well. And it does seem like that there is potential now for this, flag breakout, and sort of a flag and pole formation is there. If that is happening, then possibly we can, even double from here. That is a possibility over the next few years now. Now, for that to happen, we need to clear several resistances at 13,700, then maybe at 14,700. Once we have a new all-time high, then of course the cruising will start. But at least this is looking promising and good. So what one can do out of this, because uh, a lot of discretionary investors are also looking at these episodes. So this is good for those people who are doing discretionary, who can look at individual charts and decide as per their uh, how they pick their stocks, do a, a stock selection based on that. In our cases, in momentum investing, we will essentially pick up whichever stock lets us or narrates us as bullish story. Currently, I think we have Marksons and a couple of others in our portfolio that are going up. But I think Syngene is also one of them. So there are several stocks that are also currently at near highs, but there are many which are looking promising. This is a ratio chart, CNX Pharma to Nifty. So again, you can see here that in the last year and a half or so, uh, this has been this is a shorter time period chart, but again, last 6 or 8 9 months, this ratio that has been falling, it's kind of made a double bottom here, and once it is able to take out this 0.73 levels here, you could actually look at pharma doing really well. So this is something that one could watch out. Syngene, as I was mentioning, has been a rocket since COVID, and it is actually leading the pharma index, where that flag pole pattern has been broken out, new highs at 750. Divi's Lab, you can see here that post COVID went from 1800s to about 5400. So huge gainer there. It has corrected well. Possibly it has started to go up again. There is a sort of a bullish engulfing candle that is forming here on the weekly. Laurus Lab was one of the candidates which we bought, somewhere near 85, 90, and got out near some 500 odd, I'm forgetting. But we've avoided this entire fall because of the exit rules. And it does look like it is making a sort of a comeback, although too early to say, but it is a good potential to look at once it does give a breakout. Lupin has been languishing for a long, long time. Even after the COVID fall, 500 rupees, it went to double at 1200. Again, came back to that. So it is extremely weak in terms of longer term trend. But on a shorter term basis, you can see that there is if sort of a inverted head and shoulders formation that has a potential of couple of 100 points. So maybe we'll go to at least 1,000 points here. Lupin is a big player on the pharma index also. Abbott is another one which is looking good. It has been going up. Uh, you can see here, COVID bottom was near 12,000. We are currently sitting at very near all highs at 22,000. Once that breaks out, it may go up higher. And then Aurobindo Pharma, which has been languishing since 2021, also is looking all right. Again, 560, 580. This pivot is important, but it does look like that it has good momentum going for this. So these are some of the stocks that are looking good. Although I would still say stick to your rules and stick to strategies how to select these stocks. In momentum investing, we allow the rules of our buy rules to select which stocks we are going to buy. So there is no discretion. But in case you are a discretionary investor, you can use your discretion. So thank you so much for watching our episode, and I'll see you in the next one. Thanks. Bye.